Preparing for a senior digital product manager at Wells Fargo interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share. Question 1. How would you describe the role of a senior digital product manager at Wells Fargo? A senior digital product manager owns outcomes, not just features. In a Wells Fargo context, I would translate customer needs, regulatory expectations, and business goals into a clear roadmap. I would prioritize digital experiences that improve adoption, reduce friction, and protect customers. The senior part is influencing risk, design, engineering, operations, and leadership, while using data to make trade-offs and keep delivery aligned with measurable value. While answering, focus on ownership of customer outcomes, digital strategy, cross-functional leadership, regulatory awareness, roadmap management, and measurable business impact in banking products. Question 2. Tell me about a digital product you launched and how you measured success. In a recent digital onboarding initiative, the problem was drop-off during account setup. I worked with research, design, compliance, and engineering to simplify the flow and remove redundant steps. We measured success through completion rate, time to complete, error rate, digital adoption, and customer satisfaction. After launch, we reviewed funnel analytics weekly and ran targeted fixes. The result was higher conversion and fewer assisted service calls, which improved both customer experience and operating efficiency. Make sure to cover the problem, target user, launch approach, success metrics, stakeholder alignment, post-launch learning, and how you connected product results to business value. Question 3. How do you prioritize a product roadmap when business, technology, risk, and customer teams all have competing requests? I start by making the trade-offs visible. I score initiatives using customer impact, regulatory or risk urgency, business value, effort, dependencies, and strategic fit. Mandatory compliance items get treated differently from growth enhancements, but I still look for ways to bundle work efficiently. Then I align stakeholders on the criteria, not just the ranking. That keeps the roadmap defensible, reduces escalation, and helps teams understand why some valuable ideas must wait. In your answer, talk about structured prioritization, customer impact, regulatory urgency, revenue or cost value, technical dependencies, stakeholder transparency, and senior-level decision-making. Question 4. Wells Fargo is highly regulated. How do you balance innovation with compliance and risk management? Innovation in banking has to be safe, explainable, and well-controlled. I involve legal, compliance, privacy, fraud, and operational risk early rather than treating them as final approvers. For new capabilities, I define control requirements, data usage boundaries, disclosures, and monitoring before launch. I also use phased rollouts where appropriate. That approach does not slow innovation. It prevents rework and builds trust because the product is designed around both customer value and risk discipline. Be sure to mention early risk involvement, compliance by design, documentation, customer protection, auditability, experimentation controls, and the need to innovate safely in financial services. Question 5. How would you improve the Wells Fargo mobile banking experience? I would begin with evidence, app analytics, call drivers, complaint themes, user research, and competitive benchmarks. Then I would target the highest friction journeys, such as authentication, transaction search, alerts, card controls, or payment flows. Improvements should be simple, secure, and accessible. For example, better proactive alerts could reduce anxiety and service calls. I would measure success through task completion, digital engagement, self-service rate, satisfaction, and reduction in avoidable contact center volume. Focus on diagnosing customer pain points, using behavioral data, reducing friction, improving personalization, protecting security, supporting accessibility, and tying recommendations to measurable product outcomes. Question 6. What metrics would you track for a digital banking product? I would use a balanced scorecard, not a single metric. For adoption, I would track active users, enrollment, and feature usage. For experience, I would monitor completion rate, abandonment, latency, errors, NPS, and complaint volume. For business impact, I would look at conversion, balances, revenue contribution, or cost reduction. In banking, I would also track fraud, disputes, privacy incidents, and control exceptions, because growth is only valuable if it is sustainable. Make sure to cover acquisition, activation, engagement, retention, conversion, customer satisfaction, operational metrics, risk indicators, and how metrics change by product maturity. Question 7. Describe how you would handle a major production issue affecting customers in a digital channel. My first priority is customer impact and containment. I would partner with engineering, operations, risk, communications, and support to understand scope, affected journeys, workarounds, and severity. Then I would provide clear updates to leadership and customer-facing teams. After service is restored, I would drive root cause analysis, document decisions, and prioritize prevention work. A strong PM does not just close the incident, they convert it into better monitoring, resilience, and customer communication. In your answer, include customer impact assessment, incident response, executive communication, root cause analysis, remediation, regulatory considerations, and post-incident product improvements. Question 8. How do you use customer research and data together when making product decisions? Data tells me what is happening. Research helps explain why. If analytics show customers abandoning a transfer flow, I would review session data, conduct usability tests, and listen to support feedback before jumping to a solution. I like to form hypotheses, validate them with customers, and then measure behavior after release. Combining both methods prevents teams from overreacting to anecdotes or misreading metrics, especially in financial products where trust and clarity matter. Talk about combining qualitative and quantitative insights, avoiding confirmation bias, understanding customer intent, validating hypotheses, and using research throughout discovery and post-launch optimization. Question 9. Give an example of how you influence senior stakeholders without direct authority. In one roadmap discussion, several leaders wanted separate enhancements for their channels, but engineering capacity was limited. I reframed the conversation around customer journeys and quantified overlapping pain points. I brought data on call volume, digital abandonment, and implementation effort, then proposed a shared platform capability that solved multiple needs. By making the trade-off objective and tying it to enterprise value, I gained alignment without escalating or relying on positional authority. Be sure to use a clear situation, your influence strategy, data used, objections handled, cross-functional alignment, and the outcome achieved through leadership without authority. Question 10. How would you approach building a personalization feature in digital banking? Personalization should help customers make better decisions, not just push products. I would define the use case first, such as relevant alerts, spending insights, or next best actions. Then I would confirm data permissions, privacy requirements, model controls, and fairness considerations. I would test with clear success metrics like engagement, opt-out rate, complaint volume, and conversion. In financial services, the feature must feel helpful, transparent, and respectful of customer trust. Focus on customer value, consent, data privacy, model governance, segmentation, experimentation, explainability, fairness, and avoiding personalization that feels intrusive or risky. Question 11. How do you work with engineering teams in an agile environment? I work best with engineering when the team is aligned on outcomes, not just tickets. I bring clear problem statements, acceptance criteria, customer context, and prioritization rationale. I also involve engineers early in discovery, so feasibility and architecture shape the solution. During delivery, I stay available for trade-offs, dependencies, and scope decisions. I respect technical debt discussions because a product that looks good short-term can fail customers if the platform is fragile. Make sure to mention clear outcomes, discovery before delivery, backlog quality, sprint collaboration, dependency management, technical debt, and respect for engineering input. Question 12. What would you do if a business leader wanted to launch quickly, but risk and compliance raised concerns? I would avoid framing it as speed versus compliance. I would ask risk and compliance to specify the concern, impact, and minimum control needed for launch. Then, I would create options: delay, narrow scope, pilot with controls, or launch with specific mitigations. I would document the decision path and make sure leadership understands residual risk. The goal is to preserve momentum while ensuring we do not create customer harm or regulatory exposure. In your answer, show judgment, negotiation, regulatory awareness, options framing, phased release thinking, documentation, and ability to protect customers while maintaining momentum. Question 13. How do you determine whether to build, buy, or partner for a digital capability? I start with whether the capability is strategically differentiating. If it directly shapes customer experience or competitive advantage, building may be better. If it is a commodity capability, buying or partnering can speed delivery. In banking, I also weigh vendor risk, data handling, resilience, integration complexity, regulatory requirements, and exit options. The best decision is not simply fastest or cheapest. It is the option that delivers sustainable value with acceptable operational and compliance risk. Be sure to discuss strategic differentiation, time to market, cost, integration complexity, vendor risk, data security, scalability, compliance, and long-term ownership. Question 14. How would you improve digital onboarding for a new Wells Fargo customer? Digital onboarding should feel simple while still protecting the bank and customer. I would map the funnel from application start to funded active account and identify where customers abandon. Then I would review identity verification, disclosures, funding, authentication, and first-use education. Improvements could include clearer progress indicators, fewer redundant fields, better save and resume, and proactive help. I would measure completion, approval rate, fraud outcomes, time to onboard, activation, and support contacts. Focus on funnel analysis, identity verification, fraud prevention, clear disclosures, mobile-first design, accessibility, progress transparency, abandonment reduction, and measurable activation outcomes. Question 15. Tell me about a time you used experimentation or A/B testing to improve a product. I used A/B testing to improve enrollment in a digital alert feature. The hypothesis was that customers did not understand the value at the point of setup. We tested different messaging and placement, while monitoring opt-outs, complaints, and downstream engagement as guardrails. The winning version increased enrollment, but more importantly, it improved continued usage. I like experiments because they reduce opinion-based decisions. But in banking, they must be designed responsibly and transparently. Talk about hypothesis creation, test design, statistically meaningful results, guardrail metrics, ethical constraints, interpretation, and how the experiment informed product decisions. Question 16. How do you handle accessibility and inclusive design in digital product development? Accessibility is not a final checklist. It is part of product quality. I would ensure designs meet WCAG expectations, support screen readers, have clear contrast, avoid confusing interactions, and work across devices. I also like testing with users who have different abilities and digital comfort levels. For a bank, inclusive design is both a legal and trust issue. When done well, it improves clarity and usability for every customer, not only customers with disabilities. Make sure to cover accessibility standards, early design review, usability testing, inclusive customer segments, legal risk, ethical responsibility, and better experiences for all users. Question 17. How would you present a product strategy to executives at Wells Fargo? For executives, I would be crisp about the decision required. I would start with the customer problem and why it matters strategically, then show data on opportunity size, risk, cost, and expected impact. I would outline the roadmap, key dependencies, control considerations, and success metrics. I would also be transparent about trade-offs and what we are not doing. Senior leaders need enough detail to trust the plan, but not a feature-by-feature backlog review. In your answer, emphasize concise storytelling, customer problem, strategic fit, financial impact, risk considerations, roadmap, dependencies, metrics, and the specific executive decision needed. Question 18. What is your approach to managing dependencies across multiple teams and platforms? I manage dependencies by making them explicit early. I map the customer journey, platforms involved, owners, lead times, decision points, and risks. Then I create a delivery plan with clear sequencing and regular checkpoints across product, engineering, operations, risk, and support. If a dependency threatens the outcome, I escalate with options, not just problems. In large financial institutions, dependency management is often the difference between a good roadmap and an actual launch. Be sure to mention dependency mapping, sequencing, ownership, governance, communication cadence, risk tracking, escalation, and protecting the customer experience from fragmented delivery. Question 19. How would you respond if digital engagement increased, but customer complaints also increased? I would treat that as a warning signal, not a success story. First, I would segment complaints by journey, customer type, channel, and release timing to identify the root cause. Higher engagement may be exposing usability gaps, confusing disclosures, defects, or unmet expectations. I would review qualitative feedback and operational data, then prioritize fixes based on customer harm and volume. Digital growth only matters if customers trust and understand the experience. Focus on diagnosing metric tension, segment analysis, complaint categorization, funnel review, root causes, quality guardrails, and improving growth without sacrificing trust. Question 20. Why do you want to be a senior digital product manager at Wells Fargo? I am interested in Wells Fargo because the scale of customer impact is significant, and digital banking is central to help customers experience trust, convenience, and financial control. This role fits my strengths in product strategy, stakeholder leadership, data-driven prioritization, and delivering within regulated environments. I like complex problems where customer value, technology, operations, and risk all intersect. As a senior digital product manager, I can help build experiences that are simple, secure, and commercially meaningful. Make sure to connect your motivation to Wells Fargo's scale, digital transformation, customer impact, regulated banking environment, cross-functional leadership, and your relevant product experience. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.